going to be a question. All right. So next weekend, this weekend, Saturday, Sunday would be a question and answer class where I'm going to be answering all your questions regarding market structure. And please, I'd like to urge you guys to just ask me questions based on what I've taught you, if you feel me. Because like sometimes some people would want to ask you questions based on things you haven't thought. They would ask you questions on all other stuff that you haven't thought yet. Yeah, so when I teach those things, the questions would go away. But for now, if you have a question, ask me based on the things I have taught, right? Okay, so we are going to proceed right now with our revision on market structure. So on market structure, we've talked about trends where we had our uptrend like this, right? And we said that an uptrend consists of what? A low, then a high, then price makes what? A higher low, because this low is higher than this one. So price makes what? A higher low. Then we make what? A higher high, because this high is higher than this one. Then we make what? Another higher low, because this low is higher than this one. Then we make what? Then this low makes what? A higher high. Then this one here makes what? A higher low and a higher high. So this is what market structure, right? Now, here, what is the concept behind low price making higher lows in market structure in an uptrend, right? Which signifies bullishness. So
Uh,
uptrend signifies,
this marking of high and higher low is as per bar chart, right? Not as per line chart.
yes, 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 yes. Use bar charts, like
Yeah,
the line chart. I mean, the candlestick chart.
candlestick chart, right? Okay.
Yes, yes. So, yeah, so the idea behind this is buyers got in here, the bot right here, right? Driving price to this extent. Then price corrects, but but buyers didn't let price correct to where they got in from before more buyers were willing to get in here, driving price was even higher than the previous high. And price corrects, buyers, when we are not willing to let price get back to this low, they get in here again and will drive price even higher. Price corrects and buyers will drive price even higher. So now, if price happens to what? Break below this low with a body closing, what does that make price? So what does that mean? It simply means that what? Buyers has lost strength, because all this while they had strength, they kept pushing price higher. Before price would get to the last higher low, price would what? Make a higher high. Now, in this case, instead of price to what? Do something like this and buy, right? Buyers lost strength and price what? Made a low that's lower than the higher low. This signifies that sellers are now in control and they're taking charge, right? Signifying what? A bearish move coming in. And this is what they call the shift in structure. Now, price has broke the most recent higher low, confirming that what? Price is going from a bullish trend to a bearish trend to come. So once this happens, what you need to do is what? Wait for price to create liquidity and what? Push back inside. You take your sell and price does something like this now. Now, once this happens, what it does make this now? Now this is a high, right? This high makes a low, right? Then this low makes a high. Now this high is lower than the other high, so this is what we call what? A lower high. Then this lower high makes what? A low that's lower than this low. So this is what? A lower low, and price makes another low. This one here is a lower high, lower low, and like that. So price what? Lower high, lower low, lower high, and a lower low. And if price shifts again, what? power shifts from bearish to bear to bullish side. And that's what the shift in structure is. Now, what is a break of structure? A break of structure is simply a break of structure or
Just a question here. Uh,
okay.
uh, 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 Shifting to downtrend, like
Yes.
where should be our first entry point?
Okay. If price is uptrend like this, is this your question? If price is uptrend like this, right? Right? And then price what shifts to downtrend from uptrend, price shifts, right? Where you should enter first,
Hmm.
right? So when price
Yeah, yeah.
shifts, once price, like we are not into liquidity and entries here. This is just market structure. But just to answer your question, let me talk about this. So when price shifts, right? When price shifts, price will be creating
Mhm.
what? Multiple levels for you to take your entries from. So what do you want to see? What you want to see is what price to give you liquidity. Let's say price pulls back here. Now, if price pulls back here, you have this what support break become resistance, right? If price does
Mm,
this, right, this support break become resistance is the closest one to this liquidity. So what you should
mm.
look for what is what price should come back here, give you your entry, then you sell, right?
Okay.
Then you sell from here. But if price, but during this, um, if during your liquidity creation, price what taps the support break become resistance, right? It means what it's been tested. So when price comes back, you can't use this anymore. So you look for what above here, maybe left shoulder or this to sell, right? When we get into liquidity
Mm,
and entries, you would understand better. But this is just how you look for your entries after price has done your shift.
mm,
So this is what how
mhm.
we talk about trends, and we also talk about micro and macro structure. Let's just go to the chart and talk about all of these. Do this revision on the chart.
And if suppose in this case, instead of falling it back, if it is moving upside, like in its original trend, in our case it is bull. So how we should deal with that case?
I don't quite get your question. You said instead of following it back, price move back into
Yes,
original
yes,
level.
yeah, yeah. It moves up, straight up.
Okay, like it doesn't sell, it just
Yes,
goes straight up. Then if that happens, then
yeah.
maybe it will be that because you were wrong on the direction because you weren't paying attention to the overall trend, right?
Okay. So I could be wrong on my time frame selection, or like this all bullish or bearish trend will differ on a different time frame, right?
Yes. Okay, let me give you a very good example about what you just asked me. Let me give you a very good example about what you
Hmm,
asked me, right?
hmm, hmm,
Okay, this is a very good example. So if price does something like this here, right? You see this low that makes this high, right? So if price breaks this
hmm.
low, just as it did here, and liquidity is created here,
Yeah.
so what you're asking is,
Hmm,
could you now, and then you try to sell here, but price just goes straight up, right?
hmm. Yeah.
Okay, so as you can see, it is because you were on the wrong side of the market because the market was bullish, right? Because one thing about the market is once price is bearish, right? Bearish setups will work. Once price is bullish, bullish setups will work, right? So
Yeah.
this here, the sell, the sell from here was only to what? To retrace price and grab a liquidity and continue higher. I was in this trade and my target was this high, right? So it was only for price to what? To grab liquidity and continue higher. So if after this happens, you decided to take sales from here, you would get stopped out, right? Yeah, you would
Hmm.
definitely get stopped out. So that's how it is. So let's just go over to more examples about macro and micro structure. Let's look more about that, because we are doing this as a revision class for all of this. So let's look for more examples about macro and micro structure, because I said macro structure is the structure of the big time frame. So if the big time frame is bullish, right? That if the big time frame is making what? Higher highs and higher lows, higher highs and higher lows. That's what the micro structure, the macro structure. The small time frame is making what? Lower highs and lower lows. That's what micro structure. So if you are being stuck trading the micro structure, you'd miss out on what? The overall move price
Can you
is
just
trying to
come
make.
to left? Can you just come to left?
Okay.
Can I use my this cursor? I just wanted to ask you, just go a little up.
Which area?
Uh, just go a little up on graph.
I should go on line chart or
Yeah, no, no, not a line chart. Stay here, stay here. I just wanted to understand, like, here is a something like uh,
okay, yes.
this is our shift.
Yes.
Yeah.
Shift.
Mhm. Uh, now, uh, now price is going from uh, down to upside. So
Yes.
in this portion, where we should we go for sell trade, or we do not have any liquidity here, or whatever you can tell me as per
Okay,
this
okay.
situation. I assume this is a structure shift.
Yes,
If
yes, it is.
am I correct?
Yes, it
Yeah.
is.
So where should I take entry, or how should I go for entry evaluation?
Okay, you can take off your annotation. Let me explain.
Yeah.
All right. So here was what? A sell, a structure shift. Yes, no doubt. Price shifted from there. But like I said before, you need to understand what macro and micro structure for you to know where you are taking your trades from. If you look at the daily time frame, the daily time frame has been what? In an uptrend. And
Where
what we
were
say
we?
about uptrends is that the highs would get taken out, right? Price always take out the high. So we can have here a low and a high, a higher low, a higher high, a higher low, a higher high, higher low, and the higher high, and the higher low, and the higher high, right? So this is what gold is doing on daily. Now we have what? A higher low from here. Now price is what? Making a higher low from here. When this higher low is coming in from here, the target is to what? Take out this high. Now there can be short-term sales inside of these areas, right? Inside these areas, you can have short-term sales play out from here, but the overall target would be what? For price to what? Take out this high. Now, this is what your macro structure, your big time frame structure is this. So now you want to follow this up using your what? Your smaller time frame. So how do you follow it up using your smaller time frame? You go down to the daily, to the 4 hour.
Hmm.
Okay. To follow this up using
Like,
your smaller time frame.
is there any rule or criteria? Like, suppose we want to take trade on 30 minutes, then we should look for high time frame, one time frame up, or two time frame up, or three time frame up, or how long we should see it.
I don't understand the question. Please, can you hold on? Let me finish this explanation, then you ask the next question, please.
Okay.
Okay. So now you can go down to the now. So now you know that your major structure, your your macro structure is bullish. Now this is your high. This is your high that you want to see price take out, right? So you want to see price take out this high and make what? A higher high. So this is what you want to see, right? So once you have this established right here, so what you want to do is what? You want to wait for the 4-hour time frame to turn bullish so you can use the buys to follow the daily structure, right? You use 4-hour structure to follow the daily structure, right? With this as your target. So if this is your target to take out, this high is a liquidity to get taken out to make a new high, price to sweep this high, right? Would you expect to get a sell from there? No, except you could have retracements from there. You could have price give you some quality retracements from there, which I had this retracement trade from here, this little retracement trade from here. And I've explained this trade multiple times that I took this trade because on the 30-minute time frame, we could see price what gave us what this structure, this low, this high, or let me use this path tool for this. Okay. So on the 30-minute time frame, you could see price gave us what? A low, then a high, then a low, then another high. All right. So after this, then price gave us what? A shift. After this shift, price gave us right here. Price pulls back. So this is what? Liquidity, right? So this liquidity price gave you right here. What's your next level? The next closest level to your liquidity, you have your left shoulder, 30-minute left shoulder. So watch price tap the 30-minute left shoulder. So once this 30-minute left shoulder is tapped, right? How did I take my trade? Right after this 30-minute left shoulder was tapped, price gave you what? You can see here on the 30-minute now. This is microstructure because on the 4-hour time frame, price is bullish. We are having this high to target, right? 4-hour daily, we are very bullish. But on the 30-minute time frame, price is what? Giving you temporal bearish movements, right? Microstructure. So price what? Gives you what? A break of structure, right? On the 30-minute time frame, what do you have here? This is a break of structure, right? So this break of structure, price pulls back inside with this one here, break with this candle, first pull back on this candle high. So this is your what? Your liquidity. So mark that out. Inducement. So where would you enter from? Enter from what? Resistance. I mean, support break become resistance from here. Should be your entry, right? Okay. So your targets now can be what? All of this liquidity buildup with trend. So you can target that. So now, after this, how do you take your next entry? My next entry personally was taken from here on the 15. The entry I took for this one, I took from the 15. Time frame flexibility is one of the main assets you must have to use this strategy properly. You have to know what you're looking for because, okay, let me guide you guys through my thought process on this particular move, right? While I was on the 1-hour chart, I was on the 1-hour chart here. On the 1-hour chart, looking at this, right? Looking at this on the 1-hour chart, right? I could see this as what? Break of structure. If you're just looking at this as a break of structure on the 1-hour chart, break of structure, then this could be your liquidity. You try to sell from here. But one thing I was looking at was I went to the 4-hour chart. And on the 4-hour chart, I saw something. Okay, on the 4-hour chart, this is what I saw. That we had this one. Because I was trying to MTF multi-time frame that level. And I saw this open close seated right here. So this open close seated right here. I went down to the 1-hour. And this open close is what? Also this level, right? Also this level. Open close and this level are together. So for me now to understand the structure that played out there. That was when I went down to 15 to see if I would have any shift in structure playing out around there. And on the 15-minute time frame, I saw this, that right around that level, the 4-hour level, we had a shift in structure. Right? We had the liquidity. And we had what? Because if you look at the 15-minute, we were quite bullish here because price was behaving kind of bullish, making what? Higher highs and higher lows before what? We broke the last higher low. So once this broke, this price gave us this. So my entry was what? Support, break, become resistance on the 15-minute is the entry point. And this level, this support, break, become resistance happens to be what? The 4-hour level. So it's just like taking the entry of this 4-hour level, but now you have the structural reason for why this level is going to hold. You don't just pick the level randomly. You have the whole structure and liquidity there. So I'm selling from this 4-hour level with all my structural reasons. So I'm waiting for a reaction. So you can take your entry from there, a sell entry from there, and you sell deep. You take the sell entry from here. So this is why I said that you need to understand market structure quite properly, because if you don't understand market structure, maybe you might pick this as your breakout structure, this as inducement. You sell from here, you are right on direction, price stops you out, and yeah. So this is how I was able to take this. So I took this like this. Stop loss can be around here, and you sell. Now your target should be what? Since your target is all this liquidity is built up from here, liquidity build up from here is the target. Liquidity build up from here is the target. You can target down to this liquidity. And every time price goes up, so now you have a bias, right? You have a bias of where you want to see price go, this liquidity. So every time price goes up, right, you look for sales. You look for what? Market structure, break of structure or shift in structure, and you look for sales. Every time price goes up, you keep looking for sales. Every time price goes up, you keep looking for sales and sell till this liquidity goes out. Now, on the microstructure, yet again, you can see that we were bearish. We had a very clean bearish movement on the microstructure. But look at the higher time frame. Don't ever get the higher time frame out of your mind. The higher time frame is on the higher time frame, what are we just doing? On the higher time frame, we were simply just doing this. Low, high, higher low, higher high, and price was just going to create a higher low. And once this higher low is created, what happens next? This one becomes the target. This one. Now remember, from the daily, this is also a high that you want to see price take out to make a new high, because the daily, which was the macro structure we're looking at, that we are following with the 4-hour structure, this is a high you want to take out. So all this can be targets, this high and this high. So once price is coming back now, you are not expected. Once price is coming back now, you aren't expected to come up here and say, some people would make this mistake and then they'll tell you the strategy doesn't work. They come up here and say, okay, this is what? A shift in structure here, liquidity here. Emmanuel said shift in structure. First pullback is liquidity. Then let me take sell here. You can see that price reacted to your sell, but just use your sell as, but push back and take out the high. Right? So because why? This high was already supposed to get taken out, this as well as this. So note that in mind, that this is what the microstructure. Me, I don't look my structure below 15 minutes. I might just go to the 5 minute to see things clearly, but below 15 minutes is noise. 15 minutes is the higher, and the 15 minutes is what I use to follow the 4-hour structure a lot. So how do you know that price is going to give you your next structure. So how do you know that price is about to give you the next structure? So it goes down to liquidity. You look for liquidity because you can see price was giving us what on the 4 hour. Let's go back to 4 hours. You can see our structure point on the 4 hour. Price was giving us what? Low, high, higher low, higher high. So now between this higher low and this higher high, what you want to see is you look for price, or you could even mark like this. You could even mark it like this. If you are using like the 3 hour, let's see. I think if you're using the 3 hour time frame, there's a more structure. Okay, so you could mark like this if you're using the 3 hour time frame, low, high, here, here, here. So now between this low and this high, what you want to see is what which liquidities are inside of here. Once you mark out the liquidities, right? So you can look for what your break of structure or your shift in structure inside this area on the smaller time frame, right? Then you mark out your liquidities and your break of structure, your shift in structure. And once price taps your area of interest, what you want to see is for price to what you buy from there, and this will become your target, right? But if you were unable to catch it, to catch it from here, what would you do if you're unable to catch it from there? What will you do? Wait for price to shift after taking these liquidities, and price give you a shift, right? That is your clue that price wants to take off. So if you go down to like the 15-minute time frame, so if you go down to like the 15-minute time frame, so you go down to like the 15-minute time frame, what do you want to see when you go down to the 15-minute time frame? What you want to see here is what price will give you a shift, right? And price gives you a shift in structure by breaking out this area, right? Break out from there, and then you can now take your entry to follow the trend. That's if you miss this. But now, if you don't miss this, how do you take it? Price give you a shift in structure from here. This is liquidity, right? This low here is liquidity. And as this low is liquidity, price takes your liquidity. So you can buy at the POI below that low, below your liquidity. You could take buy straight, or if you want more confirmation, you wait for the 15 minutes to give you a shift in structure. Now, the 15 minutes has given you your shift in structure. So what do? You take your buy. You could enter from here, 15-minute open close. You could take your buy. And your target can be here, this high, to make a higher high. All right? The target can be there. So what will be your next entry? Your next entry will be what? Price give you a break of structure from here. Let's go to the 45-minute.
Emmanuel,
Price give you a break of structure from here to give
hello.
you liquidity. Yes, yes.
Can you just come down to 15-minute time frame? Uh, Yeah, what is my understanding? Uh, this is my line for structure break. That is what I believe because here uh, I find a BOS. Now, if there is a shift in structure, then I assume these high to be broken. This is my understanding. Whereas you are mentioning something here. So please help me to
Okay.
understand
Okay, let
how
me
I can
clarify that.
come to your level.
Okay, let me clarify that for you. Can you take off your annotations?
Yeah, please, if you can remove, please remove.
I
I'm
can't
trying.
remove them. Only you can remove
Oh,
them yourself. Okay.
yeah, yeah. Thank you.
Okay. So the reason why this is your shift in structure is because, right, when you look at this, right, if you want to look at the structure you're looking at, you'll be looking at it like this, which means you are looking at structure like this. No, that's not what I meant. Pick this. Okay. Okay. You'll be looking at structure like this. If this is what you're looking at to make you say this is your shifting structure, right? You're looking at it like this, this, right?
Now,
So, but
mm,
what
yeah.
I am looking at here, what I am looking at here is the fact that price gave me this structure to this side. Price gave me this market, this price gave this just followed by marking this and then break structure, right? After this structure break, from here, price pulls back and give you your entry, whatever entry price gave whatever entry, and then sell started. So when this sell started, price pulls back inside again, right? So now I was looking at just this leg was what I was looking at. And on this leg, I could see price do something like this. That's why I would take this as my shifting structure. And this is how I mark my structure most times because like I was explaining from here, the explanation I gave you from here, that if you were looking at just you look at it straight down, this would be your I might mark this as your break or structure, and you make a mistake to say this as liquidity and sell from somewhere here. But no, I was looking at the structure inside of this was this structure, and this was what I was looking at, right? So most times you use the structure inside, not just what is on the outside, right? So let me give you another example of
Uh,
where you would have made a mistake. Is if you were looking at this, if you're looking at this, you might confuse this to be your break of structure, and you say this is your liquidity, and maybe sell here. While I was looking at this, right? Right, and this is my break, then this is my liquidity. Marking the structure is where most people get it wrong, and that's where they make the biggest mistake because they mark the wrong points, right? So the area you were looking at is not really, if you are looking at the 30-minute time frame, yes, this would be your area of break. This would be your area of break on 30-minute time frame. But like I said, you want to always what look for the time frame that aligns with what you're looking for. Like if you need to know what you're looking for, then go to a time frame that will show you that because when you solve through different time frame and you see like once price taps here, I was looking for a shift. And if I saw this on the 15-minute time frame, I wouldn't hesitate to take it now with other confluence, of course. So when price gave me this on the 15-minute time frame, what I'll add is that what this is happening during the New York session. So price is what giving me my shift and pulling back during the New York session. Let me turn on my session indicator. Okay, this is during the New York session. As you can see, the red zone is New York, right? This was during the New York session. Plus, if I add a trend line, so these are all the things that would help you to make that decision. If you decide to add a trend,
uh,
you could add.
can you please validate my understanding? Like I am making a rule is like suppose we have a 30-minute sell trend, bearish trend, and in that bigger 30-minute or long 30-minute sell trend, if we find some 30-minute bull trend, small bull trend,
Hmm.
then we should look for this break of structure opportunity for sell trade in this 30-minute bull trade. in
Yes,
this 30-minute bullish zone.
yes, exactly the point. Because you look at the structure that is inside, not just this one. You don't just look at this, you look for inside, right? So let me give you another example here around here is if you wanted to take this cell, you'd make a mistake and mark here of your or mark here as your break or structure. Meanwhile, if you wanted to take it, this would have been the best. This, let me mark this. Of course, you use that with other confluences also. So one price break with this candle, once price breaks here with this black candle here, with this black candle, price breaks here. What's your liquidity? This. So you can see the sell after the liquidity was grabbed. So yes, so that's how it works. You don't just, and also when you want to take this, what do you look for? Look for the one inside, like this. And this was your shift, right? So this was your shift. And since this was your shift, what is your liquidity? Of course, here. And if this was your liquidity, you could sell, either you take your entry from here or you use multi-time frame. And maybe with multi-time frame, you could get a better entry on the M30. Let's see. Okay. Or use a 45. This session is about to end. So, okay. So
Can you please continue this session in next, a new meeting call, because it is helping me to learn. If you can,
so this one. So after this one, you can just
yeah,
you can take this one here, or you take here, wherever. So
SNR.
yes, so you could take there and you sell. So when you sell, what should be your target? So when you sell, so what should be your target? You target all of this, what liquidity build up from here, or just like this, something like that. So you target this low and you sell. Price takes out the low. Then when price is coming back again, so this would be what you look at again. Nobody cares about this. Yes, nobody cares about this, right? So when price does
Why
that,
we
I
should
don't.
not care about that? Because it's already a liquidity swept. That's why.
No, 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 that's not the reason. The reason is when you look in, you mark your structure point. After marking your structure point, the
Yeah.
peak of the last higher low, of the last lower high is your shift or higher low. So on this place, the structure point I can see. God. Okay. So like I was saying, right? You pay more attention to the structure inside, right? So that's what you pay more attention to. Like we pay more attention to trends. So like if you look here, price created what? A mini uptrend somewhere here. And from the mini uptrend, we had a shift in structure. So with that shift in structure now, we have what? This entry, right? And also from here, again, on the same note, price, we had an uptrend inside here again. We had an uptrend from here, right? And from this uptrend, we got this shift in structure from here. Now, after this shift in structure, what do we have next? We had this liquidity, this pullback, this liquidity here. So, and as a result of this liquidity, what's your next level? I think that's why this has, yeah. So that's where this entry came from. You can see it touched, price tapped it. Can see? Okay, let's put it like, oh no, like this. Yeah, that's where price came from. So we pay more attention to what trends, not just, nobody gives a damn about the structure on the outside. So what do we have here? Like, pay attention to the trend, right? So this trend here, like you really have to train your eyes to be very conversant with this, right? So this trend here. So what do we have from here? A shift in structure, right? So after this shift in structure, we had what? Liquidity. Can you see it? Is it getting clear to you guys now?
Yes, but in this case, that week is not going into going above the low of break of structure low. So can
Going
we still take it?
in
Yeah.
this in
In
this
this, yeah, yeah,
want
yeah. The point which you marked as liquidity,
yes.
it is not going above this low low point. If you can just make a little zoom.
Yeah. Liquidity
So
is
still we can.
liquidity is just you know, the first pullback. It doesn't have to go in. Like as after this
Okay,
break of
okay,
structure with this big candle, price just pulls back a little. And yeah, so we're going to continue this session later because I think
okay.
my internet is having some issues. So we're going to continue later, right?
No worry, no worry.
Yeah, so I'll just end this one right now. So we pay
Fine.
more attention to the trends, right? We pay more attention to trends, not just looking at. So here we had a mini downtrend and price shifted from that downtrend. So that was enough of what I want to see. Not here. Here. Here there was a short uptrend, price shift. You see the entry. So that's what you want to pay more attention to, not just looking at. So we're going to continue later. All right.